Ravi, are we live?
Yes, we are live now. We can start.
Okay, thank you. Hi, everyone. Good afternoon, and thanks for joining. Welcome all to F&O Bazaar, expiry day live market insights shared by our research experts. So today is the monthly expiry of NSE indices, and also this happens to be the last expiry of this calendar year, which makes it very, very interesting. I am Sonali Palande. I look after the derivative product at HDFC Securities, and I'm joined by Mr. Nandish Shah and Mr. Siddharth Deshpande from Prime Research Team to share their expiry insights. So, in this session, we are going to discuss a few very important factors influencing the expiry action, such as derivative data, how the indicators are set, important levels to monitor, and probable trading opportunities. So, without any further delay, I'm going to jump on the questions to Nandish. So, Nandish, how derivative data was placed at the beginning of the day? And also, I would like your opinion on how derivative indicators have changed till now and what are they indicating currently? Over to you,
Okay,
Nandish.
good afternoon, Sonali. Good afternoon, all. Thank you for joining. So, hope my screen visible, right? Is my screen
Yeah,
visible?
it's visible.
Okay. So, first of all, let's talk about yesterday's data. This is the our daily file which we have sent in the morning. So, yesterday we witnessed short build-up in the Nifty future. Actually, this is the Nifty 50 data. We have seen short build-up in the Nifty futures where open interest increased by 7% with Nifty falling by 0.38%. So, as of yesterday, we witnessed short build-up in the Nifty futures. Nifty open interest put call ratio also fell to 0.66 as against 0.76 a day before yesterday. So Nifty open interest put call ratio also fell. It is at 0.66. And we have seen aggressive call lightning at 26,000 and 26,100 and 200 as you can see here. So yesterday's data for Nifty was showing that we may continue we may trade with the downward bias today. Now coming to Bank Nifty we witnessed actually profit booking, no short build up like Nifty. We witnessed 4.35% cut in open interest with Bank Nifty almost ended flat yesterday. So basically you can say that profit booking at higher levels. Now coming to put call ratio, Bank Nifty put call ratio almost remained same at 0.74 versus 0.74 of day before yesterday. So more or less Bank Nifty data was neutral while Nifty data was slightly bearish as of yesterday. Now coming to FI's figure, as you all know, FI's long to short ratio is placed between 0.1 to 0.2 for the entire series. So they have created extreme short positions and they are maintaining it, barring few days where they have covered their shorts. They have kept their short and even yesterday they have increased the short. As you can see here in Nifty future, the net shorted 1807 crore with the open interest going up by 3500 contracts. So Nifty FIs have created short, while in Bank Nifty yes, the net bought 65 crore with open interest going down by 2154 crore. So in Bank Nifty they have covered short, while in Nifty they created fresh short. So all in all, as of yesterday, Nifty data was showing bearish, while Bank Nifty data was neutral. Now coming to today's data, as today also we have seen 13% rise in Bank Nifty future. Why, as you can see here, we witnessed short build-up in January, February future. As we all know, December future is going to expire today. So witnessed short build-up today also in Nifty future. All the Nifty is down by 0.2% also, more or less flat. But we have witnessed short build-up in Nifty future. And in Bank Nifty, we have seen addition of 1%. So in Bank Nifty again today also there was no major addition. Um, and put call ratio today. Put call ratio, as we discussed earlier, yesterday the put call ratio in Nifty future was around 0.65. Currently, it is trading at 0.78. So that suggests that at lower level, people have sold puts, people have returned puts, and that's why put call ratio of Nifty has moved up. Even coming to Bank Nifty put call ratio, which was 0.75 yesterday, now moved up to 0.9. So both for Nifty and Bank Nifty, we have seen put writing at today. So that suggests that market players are expecting limited downside. One more data I want to share is the entire series data. If you were to see the December series till now, we have witnessed 22% rise in Nifty future OI with Nifty trading at almost flat. So series to series, Nifty is trading flat. Even with Bank Nifty, the open interest has added 13% during the December series and Bank Nifty also traded flat. And this addition of 23% and 12% is sharply lower as compared to last two series. Normally we check the data and normally we see addition of at least 30 to 50% in Nifty and Bank Nifty futures till day before expiry. But this time we have seen minor addition, 22 and 13% considering the entire series. And Nifty Bank Nifty also remains flat. That suggests that many market players are expecting Nifty to remain here only as they have shorted calls and shorted puts for the entire series. Bank Nifty, they want Nifty and Bank Nifty to expire here only. And also, as I told yes earlier, for the entire series, Nifty and Bank Nifty has remained flat. So more or less, this data suggests that we are likely to end series on a flatter note only. Sonali.
Yeah, so that was pretty interesting number decoding, Nadir, from your side. So I also want to know what is the positional chart suggesting? What are the important levels to track for the Nifty expiry today?
Okay, so let's go to the chart. This is a Nifty chart. Here is a Nifty chart. As you can see here, Nifty is trading above this upward moving trend line. That suggests that though Nifty has fallen since last 4 days, short-term trend remains positive. Moreover, 20-day EMA, which is placed at around 25,830, Nifty took support around 878 today. So basically, primary trend still remains positive, although we have fallen by in last 3-4 days. Primary trend remains positive unless Nifty closes below 25,800. We can say that short-term trend is positive. However, on the higher side, there are multiple resistance. As you can see here, there are tre- uh, many trend lines and many moving averages are placed around 26,000 to 26,100 levels. So on the higher side, we can say that 26,000 to 26,100 is a strong resistance, and on the lower side, 25,800 is a strong support. Now coming to Bank Nifty. Bank Nifty also remained flat. As of now, it is up by 0.17% in the entire series. And primary trend for the Bank Nifty remains positive as you can see here, it is comfortably placed above this DMA. And also technically speaking, it has formed a strong base around 58,500 to 700 levels. So positionally, Bank Nifty view remains also positive. Unless we close it below 58,500, there is a higher probability of recovery from here on. And if we manage to cross 59,200, then we may head higher and Bank Nifty is likely to cross 60,000 level. So in nutshell, Nifty remain long with stop loss of 25,800 and Bank Nifty remain long with stop loss of 58,500. That's what the positional chart suggesting.
Okay. And any other important indicators are you monitoring that can add the value to today's expiry insights for the audience?
Yeah, so today also we have seen, as we discussed earlier, put call issues of both Nifty and Bank Nifty moved up today, despite Nifty and Bank Nifty are trading in the red. So that suggests that those data suggest that downside is limited. Moreover, both Nifty and Nifty are trading flat series to series. So last series was at November 25. Today it is 30th December. So almost span of one month has passed. Till Nifty and Bank Nifty are trading flat. So this data suggests that in the historically we have seen that whenever the Nifty has not given any return or and remained flat one day before expiry. On the expiry day also we haven't seen any movement. That's what the expiry data suggests. So considering the historical evidences that this suggests that we are likely to remain in the range for this for today for the remaining part of the day.
Okay, so range bound to positive is the view that is coming out from the insights that you have shared basis on the derivative data and all the chart positions and everything. Now, Siddharth, coming to you, what are the important levels to watch from option distribution chart and any other important indicators if you want to share?
Yeah.
Yes.
Yeah. Thanks, Sonali. Yeah. So basically, if you see the put option side, 25,850 has seen a open interest of almost 3.31 lakh contracts, where the net addition is almost 2.45 lakh in today's session. And IB is currently trading around 8.80 level, which is on the lower side. And so basically, there is the aggressive put writing seen is around 25,850 level. Same case with 25,900 put option also, which is at the money currently. So open interest is around 5.12 lakh crore. There is a change in open interest of almost 3.73 lakhs in today's session. Almost the volume crosses more than 1 CR. And IB is currently around 8.49 level, which is also on the lower side. So basically the interpretation is that basically all at the money there is a put writing seen around 25,850 to 25,900 level, and IB is also crushed. So basically, people are not expecting there is a major downside from that level. So currently, you can expect a support around 25,850 to 25,900 level. Even technically, Nandish has also spoken about the same support. Even open interest also suggests the same support around 25,850 to 25,900 level. Now we'll move towards the call option side. Around 26,000, we have seen a massive call writing. So around almost open interest around 5.48 lakhs, and there is a change in open interest of 2.67 lakhs. So volume is also crossing above 1 CR, and IV is slightly higher of 9.66 level. And so basically, we have seen a call rating around 26,000 on the call, and put rating is around 25,850 to 25,900. So even derivative data also suggests that Nifty will remain around that level. Yeah, over to Sonali.
Yes. So are we also getting any clues from the implied volatility that can suggest anything interesting?
Yes, correct. So basically, if you see the put option IV is around 8.80 and 8.49 level, which is also on the lower side, which is not suggesting there is any panic selling. Yeah, any panic premium is there in IVs. So comfortably, you can expect a support around that level only. If it is breaching that 25,850, then we may see IV rising. But currently, I think we am expecting that IV will continuously fall if it is not breaching that 25,850 level. On the upper side, 26,000 is the call option where the maximum call rating has already happened, where the IV is around 9.6, which is slightly higher. So on the 26,000 is the currently you can expect a resistance level, and 25,850, 900 is the support level according to IVs also. So there is no panic in IVs, because if there is a major movement is expected, you can expect IV about 10 or 12, but currently which is both below 10 level. Yeah, over to you, Sonali.
So does that also mean that we are not expecting any such panic or very wide momentum into the expiry today?
Yes, that is also currently suggesting, but once that 25,850 breach and with the IV increase, then we may expect a major downside movement. But currently, which is not, the data is not showing that thing. On the upper side also, the IV is around 9.6 for 26,000. If it is 26,000 is breached with the heavy volume, and then IV with the IV increase, then we can expect 26,000 to breach. But currently, current data is suggesting that Nifty will remain in that range only.
Okay. So now, Nandish, I want to have the overall outlook on Nifty from you, and also which derivative trading strategy one should take today, and overall, where do you see the Nifty to expire in today's expiry? So overall, your view on the expiry and the probable trading opportunity that one can take.
Yes, Sonali. So considering the all rational, the one is the rise in put call ratio today, the put rating at 25,850, 25,900 level. And also, as we already fallen since last 4 days, Nifty has been falling since last 4 days. Our view is that if Nifty comes to support level of 25,850, I think it's good strategy to buy a call. So our advice for Nifty is that if Nifty comes to around 25,850, where we have multiple support technically also and also derivative side, around 25,850, if Nifty comes between 850 to 870, one can buy call. One can buy call of 25,850 at that point of time. And on the higher side, without going to that level, if Nifty moves up sharply and go to around 25,950 to 26,000 level, then it is advisable to buy put. So as of now, we believe that we are broadly, Nifty is likely to trade within the range. If Nifty comes to at lower band around 25,850, one can buy call. And on the higher side, the band is 25,950 to 26,000 level. So if it Nifty goes there, then one can buy put for the expiry, for the today's expiry. Now coming to Bank Nifty, as we discussed earlier, Bank Nifty data is not that negative. Bank Nifty has a very strong support around 58,800 as per the option data. So Bank Nifty also, if it falls 50-70 point more from here, and if it comes to 58,800, one can buy call for the Bank Nifty for today's expiry. And if it goes higher and if goes to 15,100, then one can buy put. So basically, considering the IV, we believe that we are likely to remain within the trading range. So if market falls sharply, you can buy call. If market rises sharply, you can buy put to take advantage of that intraday volatility. But broadly, the data suggests that we are likely to within the range. And Nifty, as of now, it seems that we are likely to expire between 25,900 to 26,000 levels. That's what the option data is suggesting as of now.
Okay, so as a conclusion, we have got a view that the market will stay range bound, and also we have got a range of 25,850 to 26,000, and also the actionable if the important levels are going to be broken. So thank you, Nandish and Siddharth, for the valuable insights on derivative data, key levels, and expiry dynamics. I'm sure this discussion has given our listeners a clear perspective on how to read expiry day signals and align their trades more effectively. To our audience, we hope today's session helped you understand how data indicators and option positioning come together to shape the expiry day price action. As always, expiry trading demands discipline, risk management, and clarity of the view. So please trade responsibly. We'll continue bringing you timely market insights through F&O Bazaar and our regular webinars and live sessions. So thank you so much for joining, and have a happy new year in advance to all everyone joined here. Thank you so much.
Thank you, Sonali. Thank you all for joining.
Thank you.